Good morning, ladies and gentlemen. Happy Friday to you all. It's that time of the week again for viewer requested ticker Fridays. So we're going to start off with BN or Brookfield Corporation. As you can see here on the chart, it basically had a significant downtrend, as I would call it. Really haven't really shown any appreciation in price. If we go in closer just to see what the chart's telling us, we are starting to get back to that zero line on the MACD. However, it has the potential to roll back over, and you're not really seeing price appreciation in the stock at all. It continues to make lower lows and higher lows as well. We're not really having any increased value to the shareholder. As you can see here, you're getting near basically a price target, and especially with the market running the way it's recently been, this company should be appreciating in value versus just kind of going absolutely sideways. Now, the Russell didn't perform as well as, for example, the S&P or NASDAQ, but then again, companies inside the Russell did appreciate today about 0.6%. This company today actually went down 0.96. So it's just showing that it's not really an enthusiastic company to buy. Now on the daily, for me, I can clearly see an A to B pattern present on the chart where we have from our swing high to swing low to pivot point projecting down to $23.23, which is confirmed once you trade below $28.28. If we look on the weekly, we can clearly see probably some price depreciation coming into play. MACD on the weekly wants to curl back over and cross over. RSI has more room to go. For me, with this company having such a massive run, and also if we just quickly jump over to the moving averages, you can clearly see it's below all of them, including the 50 daily being your main resistance. Basically, you have to get over the 50 daily and then start tackling the 200 weekly. Until you get to that point, I wouldn't recommend investing in the company. You can clearly see an M pattern here formed and possibly playing out to the downside. For me, if I was gonna try picking it up, try bargain scooping, probably down at the 23.64 area, which would be a double bottom of this consolidation from COVID. But other than that, I would not be trying to pick this company back up at all. So next we're gonna go into ADC. So looking at ADC, we kind of are consolidating around this region, having this very large range, which could break to the upside with the MACD basically trying to curl back to the upside. RSI is significantly lowered, so it definitely has the potential to head to the upside. But then again, we have to be cautious that we don't just think, okay, it's showing the sign that we have to go to the upside. You can depreciate lower. As you can see here, the resistance would be around the $68.36 point first, and if you break above that, $70.25 would be my upper target. Jumping over to the SMAs, you can clearly see that you're fighting the 50 daily moving average, so you're definitely going to have to get back above that before you have significant more price appreciation. Now, you do have support possibly at the 200 weekly, which you have not retested, which comes in at $64.22. That would bring the stock right to this reversal zone, which at that point the RSI would be pretty significantly diverged, and along with the MACD forming a divergence there to the upside, definitely would be looking at further price appreciation once you got down there. So just to keep that in mind, I would wait for the 50 daily to basically be broken, then look for that upside potential. You do have earnings coming up in July. You just had earnings back in May, so you're kind of stuck between those earnings, but we have to see how everything plays out. Next, we're going to go to Berkshire Hathaway. So now this is Berkshire Hathaway B, not the A, which is the crazy evaluated stock. The financials, Berkshire Hathaway has been on an absolute tear. You can clearly see that we are in a selling zone, possibly. However, the RSI is very concerning. As you can see here, the RSI peaked out at 77.54. So you really have to see further price appreciation in order to not create a RSI divergence, along with MACD basically diverging significantly. The company has basically performed very well, but here's my thing, that the financial sector most likely will drag this down with this divergence once it plays out. I'd be looking at the $296 to $300 price point. I know that's a significant decrease from where you are now. That would be about a 10% haircut, but that divergence, once it plays out, is going to be a nasty cut, and you really don't have a lot of room to the upside to play. You definitely have to be looking, maybe taking profits at this point. You are in a selling zone. On top of the weekly, it has a strong sell signal. and the MACD could possibly roll over. Now you could continue to push up, but I would be cautious on that just because you'd be bashing your head into this reversal zone once you got up into the $336 range. So be very, very careful when playing this company, and just overall be careful in the market right now. I think we're setting up to be possibly an offside trade where people are going to get offside and then they're going to rip it down lower. Financials haven't really been performing very well. Even Warren Buffett himself, which is one of the co-founders of Berkshire Hathaway, has basically said that he's not looking to invest in banks, so maybe take his own advice with his own company as well. So we have to see how that all plays out. Now, next we're going to go to, and finally, PARA. So looking at PARA, which is Paramount Global, so had horrible earnings, basically coming in, gapping down, hitting the reversal zone. You do have what could be perceived as a dead cat bounce right here, but until this starts making higher lows or lower highs, I wouldn't be necessarily trying to play into it. So the RSI is significantly oversold, but then again, it could be landsliding down, especially if the earnings create a very bad guidance. Just looking at this, I wouldn't be investing in the company. It'd be an interesting play to play the earnings gap fill, and once it comes back up to this $18.98. But really, you're breaking a lot of price structure. You broke the lows here or double bottomed. So the risk to reward is pretty skewed in your favor if you go to the upside, as long as you sell out once you break this basic bottom of the candle sitting around the $14.89. But other than that, I wouldn't necessarily be playing this just because it's not really respecting any necessarily pattern. I would like to see more consolidation in this area and with some more volume to basically push up from here, especially with the market running the way it was. I wouldn't be necessarily wanting to play this, because if the market turns down, this decides I'm going to turn down with the market, there's higher risk there. So overall, I just basically sit on my hands with this company, maybe look for like Berkshire Hathaway, like we mentioned, maybe a more interesting buying point. But really, what all the companies mentioned today, I'd be looking to wait and see how everything plays out, just because we're not really in a stable point. So with that, guys, I'm going to conclude today's video. I hope you enjoyed. Throw any tickers you want, cover it down in the comments section below, and we'll try to cover them this week. And stay tuned for our weekend deep dive, where we go over and give you the key levels of the market. And it should be an interesting one with Jerome Powell talking today at 11 o'clock. So I hope you have a wonderful day, and I'll hope to see you tomorrow.